Alrighty, so today we're covering chapter 1 in DITMR for the food, beverage, and labor cost control. Today we're talking about costs and sales concepts. So some definitions that we start off with is revenue, which is also known as sales. That's the amount of money, dollars, credit cards, checks that people give to you after you serve them food and beverage. Expenses are going to be all of the costs of the items required to operate your business. So every type of supply that you have to buy, ingredients to make the food, all your beverages, your equipment that you have to purchase. There's several other categories and we'll go into those as well. You take a look at the formula for profit. That's the amount after you subtract your expenses from your revenue. And if your expenses are greater than your revenue, then you are going to have a loss instead of profit. Okay, so again, revenue, we also call it sales. It's the income or cash or value that we receive in exchange for the service of food and beverages. Some examples, we might say we had a 100 guest wedding at $50 per cover. Our revenue will be $5,000, and that's just the $50 times 100 guests. The burger joint had $3,500 in French fry sales last month. And if we look at that, we wanted to look for the meaning in that phrase, might say that they were open for 30 days last month. So they had roughly $100 worth of sales every day that they were open. That might help us judge whether that's a good month or a bad month. When we're talking about servers, that server only had $25 in sales last night. That can be an issue because, well, for the server, they're going to get tips. And even if their guests tip 20%, they would get $5 in tips for a whole night shift. And that's not very much. So we're going to break our costs up into different categories. We have 4 main categories that we're going to take a look at. Of course, the cost of food, and that's actually producing the menu items. So everything that you need, salt, pepper, breadcrumbs, frying oil, any of the meats, produce, things that you have to buy. And in most restaurants, food cost is going to either be the leading cost or second to labor cost. Beverage costs, those are related to the sales of alcoholic beverages. That's what we're talking about in this class. If you're serving sodas and iced tea and things like that, that would be that would come under your food cost. But there are some things that we're going to talk about when we discuss beverage alcohol and the unique characteristics of it. So specifically, we're talking about beers, wines, and liquor. Next cost is labor costs. That includes the cost of all employees necessary to run your business, including taxes and benefits. And like I said earlier, that's going to compete with your food cost as the major cost in your restaurant. The last category is overhead costs. This is going to be everything else that you have to pay in order to run your business. Could be for your utilities or gas, natural gas, water, electricity, your rent, or if you're paying a mortgage, everything else that you have to pay for that's not food, beverage, and labor. And speaking of food, beverage, and labor, it's important to know this term prime costs. That's how we're going to refer to our costs that we're paying attention to. It's the name of this class, food, beverage, and labor cost control. So these are our prime costs. We're going to talk about those. We can do the most to control those costs in order to increase profit. Your overhead costs definitely do affect your profit, but that is not going to be the focus of this course. So it's important that managers understand how to manage their expenses, and something that chefs do in restaurants all over the world is use percentage calculations. So we'll talk about food cost percent, and a rule of thumb is 33%. It's just kind of a base number to look at. And if you can keep it below 33%, that's going to help you to make a profit. So we have some formulas. These need to be memorized, but you can also create a cheat sheet for this class. You can have a sample on the Moodle page of some things you would include on your cheat sheet. But these things you should really know off the top of your head. Food cost percent is going to be equal to your food cost divided by your food sales. Beverage cost percent is going to be equal to, and this is a typo here, just the beverage cost divided by beverage sales. And labor cost percent will be equal to labor cost divided by total sales. So where beverage is just associated with beverage sales and food is associated with food sales, labor cost applies to total sales. And then we have variations on these formulas. So if we want to, let's say we want to calculate food sales, which would be a menu price, we would take our food cost and divide it by the food cost percent that we would like to have. So if we wanted a food cost percent of 25%, that's the number that would go here. And then we'd calculate how much our recipe costs divided by 25%, and then that would become our menu price. Same thing with beverage costs. We're just solving for the three different variables that are in the original formulas. And also with labor cost. Those things will come in handy, and we'll take a look at those throughout the semester. So some samples of cost percent formulas. Our food cost for a particular item that we have in the restaurant, we pay a total of $10 for this plate. Okay, the food sales, that's what we charge for the food, or the menu price. In this example, it's $25. So the food cost percentage would be the food cost divided by the food sales, which is $10 divided by $25. That gets you 0.40. So what I want you to do in this class is convert that to a percent so that the food cost percent is equal to 40.0%. And we want to round it to 1 decimal point. So we have another one here. The food cost is $3.50 and the food sales is $9. When we divide that out and convert to a percentage, we get 38.9%. Okay, so those are both higher food costs than the 33% rule of thumb that we were talking about. So we would probably want to do some work to reduce those food cost percentages. Okay, just going out of percents, the actual word percent means out of each 100. There are 3 ways to write a percent. This is how I want it to be in this class. I want you to use the percentage sign in the common form. So if your answer is 10%, it should read 10.0%. If it's a fraction, it would be shown as 10 divided by 100. In the decimal form, which is probably going to show up on your calculator when you do the calculation, it's going to be 0.10. But you got to make sure that it, when you write it in the common form, that it is 10.0%. All 3 of these are the same thing. Okay, so further example, if we take a look at 100 pennies, that's equal to $1. So 100 pennies is 100% of $1. We take away half of pennies, we'll have 50 pennies left. That is 50%. It's just the 50 divided by $1. If we cut it way back to only 5 pennies, it's 5% of $1. And if we cut it way, way down, a half a penny is going to be 0.5% of $1. So if you write down 0.5% of your answer, this is what you're telling me that you have. But oops. That's very different from if we had this whole group here of 50 pennies, which would be 50%. All right, so we have various types of costs. First one we'll talk about are fixed costs. These costs don't change if we have if we do more business or we do slow business. Your rent is not going to change. It's going to be a set amount that you have to pay every month. Your insurance bills are probably going to stay relatively the same over time. Your utilities, your water, gas, and electricity bills are going to stay pretty much fixed over time. So other than fixed costs, we also have something called variable costs. And these are the ones that are clearly related to business volume. So food and beverage are the 2 biggest costs that we have that are variable costs in food service. Because if we have 1,000 people coming in a day, we're going to have to pay a lot more for food and beverages in total than we would if we only had 500 people coming in a day. And then we have something called semi-variable, and that's talking about labor cost. When we talk about our employees, we have typically there are 2 different categories of employees. We have people who earn a salary, which every pay period they earn the exact same amount of money, whether they work 60 hours a week or 40 hours a week or 80 hours a week, they're going to collect the same amount of money. The people that get paid an hourly wage, they're going to be the variable portion, because when we're really busy, we need more of those people and we need them to work more hours, so that wage is going to increase. But if we slow down, we're going to not have as many people on the schedule. We certainly wouldn't be paying overtime if we're really slow. So that's the only semi-variable cost. So if we're looking at these two employees in the restaurant, this woman is Chef Susan Spicer. She owns a couple of restaurants in New Orleans. Um, and we have a dishwasher. So the chef or the owner is going to be getting paid a salary. Whereas somebody like the dishwasher or a prep cook or a line cook, they're going to be getting an hourly wage. So again, prime cost, it's the sum of the food, beverage, and labor costs. Labor costs, of course, includes salary, your wages, and employee benefits. As an example, if we talk about an employer, let's say you're working in the kitchen, and they're paying you $10 an hour. So at the end of the week, you get your paycheck, and it tells you a gross amount, and it's just $10 multiplied by how many hours you worked for the week. And then you see what the government is taking out of your paycheck. What you don't see is that the employer is actually paying more to the government. They're matching some of the monies, like your Social Security deduction. They're matching that, and that goes to the government as well. So technically, the restaurant is paying you more. You cost them more than $10 an hour, and that's an important thing to realize when you run a business. We also have historical costs, and basically we're going to talk about an income statement in a few minutes, and we keep those, we print out an income statement every month, and we use the numbers in that to compare performance from one month to the next or from one year to the next. And we'll also look at planned costs to project what we think the costs are going to be for some future time period. Okay, our monetary terms. You want to think of dollar signs and sales. So total sales, you can look at total sales for the whole restaurant. You can look at total food sales. You can look at total breakfast sales or total sales for Monday, and compare those, like compare Monday to Monday and see how it varies from week to week. You can also look at your servers and talk about, okay, this server had $250 in sales last night, and this server had $500 in sales last night. And there could be a lot of reasons why there's a difference in that. It could be that there were some big spenders that the second server was working with and ended up having a higher number of sales. Could be that the first server is less experienced and can't handle as many seats, so their sales are going to be lower. We look at things like the sales price, which is menu price, the average sale per customer. That's going to be very important in the next chapter. Average sales per server. We can do all sorts of calculations that will tell us different things about how our business is going. Non-monetary terms are usually a count. So we might count how many steaks we sold last night or last week or last month, or how many Whoppers does Burger King sell in a week, in a day, or in a lunch period. You can use things like that to plan for how much prep to do in your restaurant. Definition, cover is one diner or guest, and total covers refers to the total numbers of customers served in a given period. You can use that number of total covers to calculate your seat turnover. Some restaurants have a high turnover. You go to restaurants at like Disney World that there's a lot of people at Disney World, and they go into a restaurant, you eat, the food comes out really pretty fast, and you might be at the table an hour. Whereas if you go to some other restaurants, you might spend 2 or 3 hours enjoying a dinner. So seat turnover is going to, of course, affect how much sales that you can do in your restaurant. Um, so that's going to be an important number to know. So we just count the number of covers that we have during a dinner shift, and then divide that by the number of seats that are in the restaurant. And that gives you your seat turnover. We also have something called sales mix, which we're going to take a look at the end of this PowerPoint. Describing the relative quantity sold of any menu item compared to other items that are in the same category. So if we had a list of all of the entrees in our menu, we can say we sold 60 fish and 40 chicken. Each item would add up and see what our total was, and then we're going to do another percentage calculation. Okay, so we talked about profit and loss or an income statement. This is a very, very simple profit and loss. Always at the top, you're going to see your revenues or your sales, and we're going to identify that as 100%. Everything that we have as costs will be compared to our sales. So we have food and beverage costs. We have labor costs. Those things together make up our prime costs. And then we have our overhead cost. So we go back to our equation to calculate profit. We're going to take the number that we have for sales and subtract food and beverage cost, labor cost, and then overhead costs, and that's going to give us a profit, we hope. If we have costs that exceed our revenues, then we're going to show a loss. So we do this on a monthly basis. The last day of every month, it's like taking a picture of your status. Once you have this income statement prepared or your profit and loss, it's going to stay that way. Okay, so we have an example for the month of December. And as I said, on the top, we have our sales figures. Food sales is 100,000 and beverage sales is 25,000. So our total sales is $125,000. So this column on the right will be where we put our subtotals until we get down to the bottom. So when we start looking at our costs, we have prime costs, our food, beverage, and labor costs here, 30, 10, and 28. That adds up to $68,000. We have our overhead costs, $40,000. So I'm going to put our total overhead here. And then our total cost is going to be both of those added together. The 68,000 plus the 40,000 is 108,000. And then we calculate our profit by taking our sales of 125,000 and then subtracting the total cost of 108. That's how we get $17,000. Okay, so this is for the month of December. If we take a look back at November, we're going to see that we had total sales that are a little bit lower of $104,000. When we look at our prime costs, we're going to see those are the same. They added up to $68,000. and our overhead costs are the same at $40,000. So we saw a decrease in the sales. The expenses stayed the same. The total cost is the same of 108,000. But our profit, because our sales went down, our profit went down, and now we're actually showing a loss. We're losing $4,000 in the month of November. And that's indicated in accounting with the parentheses around the number. And you can either do that, or if you're doing homework or a quiz or a test, you can just put a negative sign in front of the number. Okay, next thing we need to take a look at is the sales mix. I have to see if I can edit this part out. Nope. Okay, so when we do sales mix, we have a record of how many of each item that we sold. So I'm going to just pick some numbers here. I'm going to calculate the total number of plates sold, and that comes out to 520. So the formula for the sales mix, I'm going to take the number sold and divide it by the total number sold. So we sold 100 fish plates. We're going to divide that by 520. It's going to be a percent to 1 decimal point. So put a formula in here to calculate that. So our answer is going to be 19.2% for the fish. And then through the magic of Excel, I'm going to do the calculations. And then the total should come up to 100%. Now, if you're using a calculator, your rounding might be a little bit different than what it is in Excel. And you might come out to 99.9% or 100.1%, but don't worry about that. It should be very close to 100%. So this is 75 divided by 520. Figured it out. So those are the formulas for each one of the sales percents. I'm having trouble seeing it, make it a little bit bigger. So the reason that we do this is we're going to take a look at these percentages, and I mean, we can look at the numbers for 1 week at a time or one night at a time. But over a longer period of time, the percentages are going to start to mean more to us. So we'll take a look, let's look at the vegetarian plate. If this is for a week, we sold 3.8% of the plates as the vegetarian. And it could be that we don't have a whole lot of vegetarians coming into our restaurant. But maybe the ones that do come in with people that spend more money on other things. So we might want to keep the vegetarian item on the menu. We also might have just a really bad vegetarian item, and people don't like it. They try it and then they never eat it again. So we might have to take a look at it. The sales mix is going to be your first line of looking at, okay, how are things performing on the menu? Clearly the beef is our biggest seller by a lot. It's more than double what we're doing with the fish. So this is just going to give us a little bit of information about how we might want to go about doing our changing our menu, saying if we want to take things off the menu or add items to the menu. And that's everything for chapter 1. Take that off.